Chinese securities have been declining since the beginning of the year. And some of you guys have been asking me, what are my thoughts on these securities right now? Is this a potential buying opportunity, especially with stocks like Alibaba going under $70 per share? And so that's what I'm going to talk about in this video. And so guys, as you smash that like button, let me run that intro. What's up, guys? And you can see that in just 1 year, Alibaba has declined 42%, and a lot of us have purchased the security much higher than that. So a lot of us have declines that are much greater than that. But you can see that come or the beginning of January, the stock just completely cratered downwards. And so the question is, what's actually happening? And there was an article that kind of summed it up really well. And here's that article where it just says that, after a bumpy recovery, China's economy still faces some serious headwinds in 2024. And yes, they did do well in 2023 or in line with expectations, but there are some deep-seated structural issues which still impact the country. And, what they're really talking about is all of the stuff that we've been talking about for years on this channel. For example, they still have the real estate issues. They still have the debt issues at the local level. They still have an economic slowdown globally that would impact jobs and production in China. And so you have all of these issues that are still happening. Nothing has really been resolved. And I think one of the questions that the market has is, how much is the government helping this situation along? I really thought that there would be a little bit more government intervention to sort of continue demand or make demand a little bit stronger, or try and make demand a little bit stronger, but it never really happened to the level that I was hoping post reopenings. But we can see what happens in 2024, but the market is not giving them credit for it because of what they've seen in the last 2 or 3 years. And this is what I mean. China did confirm that the GDP rose 5.2% in 2023, which was in line with what we were expecting. We wanted to see something in the 5% range. However, it looks like when it comes to forecasting GDP, it's actually coming in lower for 2024. And this is what I'm talking about. This is in that same article where they say that the World Bank, in their latest assessment of the global economy in January of this year, forecasted China's 2024 growth to slow to 4.5% in 2024. And, when you see that, and so they're saying on the back of weaker domestic demand and mounting geopolitical tensions. But here's the thing. When you see something in the 4% range, that's developed economy numbers. That's not what I would expect in China. And so when you see 4.5%, that spells trouble, at least in my opinion. And so, even when I'm expecting Alibaba's domestic growth numbers for their China commerce business to grow at 8%. The question is, do I have to bring that down? I think I should. And so I'm going to be reforecasting those numbers. And, a couple of years ago, forecasting the China commerce segment growing at 8%, people would have said you're crazy because I was growing in the double digits. So bringing that into the single digits was nuts. But, now bringing it down to maybe 7.5. I think I already have it at 7.5, maybe like 6. So just a couple of points higher than the regular growth rate of the overall economy. It seems more prudent to do that. Will that reduce the valuation materially? Probably not super materially, but enough that Alibaba may not be trading at 1/3 of its intrinsic value. It might be trading at 40% of its intrinsic value, something along those lines. But, the question is, what is the Chinese government's response to this in 2024? And that's one of those things that we're going to have to wait and see. And so the question a lot of people would have at this point is, what are my thoughts on holding Alibaba? Am I still bullish? Am I buying more? Look, I've always said to you guys that I'm not an advice channel. This is more of a teach a man to fish type of channel as opposed to giving you guys stock picks, and I hold to that. It does grow this channel a lot slower, and there's a lot fewer people that want to follow this channel as a result because I'm asking you guys to do the work. However, the people that do follow this channel, I believe, are the better investors. And so the way I'm thinking about it is I'm holding on to my Alibaba securities. When it comes to portfolio diversification, because the portfolio has grown, especially over 2023, I do have the ability to add more Alibaba exposure, and I probably will. But there are structural issues in the country that you guys have to pay attention to, and I've spoken to many of them. The real estate issue, the potential local level of debt issues as well, the a global economic slowdown, which of course would slow down the factory of the world, which is China. Another issue that I have spoken about on this channel, and I don't see, I'm starting to see more and more people talk about it, but not really presenting the data, is the old age dependency issue. And this is what I'm talking about. You can see that the old age dependency ratio is just the percentage of people over 65 as a percentage of the working population. And you can see that right now, China is lower than most developed countries. However, notice how when we go 20 or 30 years out, China even surpasses Japan by 2080 at least, or 2075 or something. But the point is that the population is aging and it's not being offset by immigrants. And I believe that that's why the US is able to stay so low. I think in this forecast is built in that they're able to offset it with immigration, but that's not a reality in China. And so, you know, this is going to be a problem for the country. Now, how are they dealing with it? Well, they're dealing with the same way that developed economies are dealing with it, by pushing up the retirement age. But you can't push up the retirement age to 125. And so there's a structural issue here as the working age population is getting older in the country. And if you think Alibaba going under $70 per share is the time to buy, recall that it was just a year ago, just over a year ago, I guess, that Alibaba hit $63.74, October 28, 2022. Some of you guys on the Patreon actually ended up buying this at that price, which was fantastic for you guys. But just recall, guys, that just because it's under 70 doesn't mean it can't go under 60. So just be careful and don't try to play that whole technical game, because you can get burnt. People are playing the technical game at $150 per share, and you can see that they got burnt as well. So be careful. Weird things happen in the market. And so just in terms of valuation, I wanted to see where the industry was with respect to how they're valuing this thing. And so you can see that the EPS for 2025, which is their next full fiscal year, because they report they report their fourth quarter in March, is $9.70 per share. So that reflects a 14% equity yield, even before taking into account the excess cash. And so it would be beyond cheap, I would say, at this valuation. And that's kind of what I've been saying for a long time. And that's why I continue to hold on to my Alibaba securities. And it's why I personally am adding, but I don't recommend that you guys add, especially if you don't have the diversification space in your portfolios. But once again, this is not a recommendation channel. Do not follow me in any way, shape, or form. And the reason for which is because ultimately I'm trying to develop a community of people that are like really good investors who know how to fish, not necessarily people who are just looking for me to do the research for them. And you know, that's why we have the tracker and all of that stuff. And speaking about the tracker, let me just go into it and see what I'm forecasting their EPS to be in 2025. And so you can see that I've decided to forecast Alibaba using a stock-based a free cash flow valuation on a net basis of stock-based comp. So basically what I do is I forecast free cash flow, and then I deduct what the expected stock-based compensation would be. And so I get this free cash flow net of future expected stock-based compensation. And that's what I believe the owner's earnings are. And then I forecast based on that. And so you can see a full breakout of how I do that in the model, but it's very important with companies that have a high amount of stock-based comp relative to free cash flow to do that. And so by doing that, I get to a valuation of $205 per share, which you can see here in the tracker. And, you know, if you wanted to go into the model and see a full breakout of exactly how I model Alibaba, I do believe it's probably the best way to model out Alibaba. You can just click into right here and you can get into there. Now, there's a whole bunch of other companies here that I've covered with this pink here, but I've opened up Tencent. And the reason why I wanted to open up Tencent is notice how Tencent is coming down. It's now trading at 60% of what I think its intrinsic value is. So I think 2024, I won't just be buying Alibaba, but I will also be buying Tencent at these valuations. You know, Tencent trading at 16 times earnings is pretty incredible for the type of company that they are, and they are a global player. Although they dominate China, they are, especially in the gaming sector, they are starting to dominate the world. And so this is another company that is a very future-focused, wonderful business. And if you wanted to see how I got to that $58 per share valuation, which I did in May of 2023, so it definitely needs a refresh. You can click right into here when you get access to the tracker, and then you can go into the model and just see how it aligns with your model or how you would model it differently. And so how do you get access to this tracker? Well, in order to access the tracker, it's right here at this low $5 a month tier. I'm not really trying to monetize you guys as much as possible. I'm not like one of those YouTubers or I guess social media people, but basically at this level, you get access to all of my research, which houses all of the company models and all of the commentary that I provide to the Patreon community. Now, the other tier, if you really wanted to, and I believe that this is the best value, for $15 a month, you get access to the live calls, there's special courses, and a comp schedule, which includes a comps of all the regional banks, because that was something very interesting, and it ended up being very profitable in 2023. And I'm going to be adding to that comp schedule. I'll be adding retailers, dividend securities, etc. And so there's more to come there. And so if you haven't taken a look at the tracker, I encourage you to do so. If you don't like it or it doesn't provide you any value, message me and I'll refund your money. No questions asked. I hold myself to that because I don't want to take any money from anybody unless I provide you guys with value. Now, question for you guys is, are you investing in more Chinese securities, or are you maxed out? Where are you guys looking to find value in this environment? And so I'll leave it there for you guys. Let me know in the comments below. I respond to absolutely everyone. Okay, so I'll see you guys later.